Friday, September 1st, 2023, Maneko 64, home of alternative economics and contrarian views. Today we're going to look at UK house prices. The Nationwide just published house prices for the month of August. They've dropped the most, not surprisingly, since 2009. I think they dropped 5.3% year on year in August. Why not surprising? Well, because the Bank of England has had to raise interest rates. Bond yields have been going up. Mortgage rates have been going up. It's only natural. So what we're going to do today, aside from looking at this situation, is to look at the ratio between house prices and the ounce of gold. And you might be thinking, what's that got to do with house prices, gold? Well, I'll try to explain it to you if you haven't watched my videos or if you're not familiar with gold. But before I do, I'd like to thank all of you again for your interest in this channel. If you're new to the channel, be aware that I make a video every day. Make sure you subscribe, you like, hit the like button if you like my videos. Try to hit the little notification bell and try to share it with family, friends, colleagues, people who you think could be interested in my message. And yeah, I usually don't say anything about the number of subscribers, but it would be nice to get up to 100,000 before the end of the year. Last year, towards the end of 2022, was picking up quite nicely, but this year it's plateaued out. But I just keep going. You never know what could happen with one video. It could go viral, who knows. But anyway, back to UK house prices. So I saw this morning and it came out quite early. Let's have a look at the data exactly. So a nationwide house price index for August, it dropped 0.8 from July, month on month. It was expected to drop 0.3. So it's an unexpected drop. That's usually the way. The mainstream economists are always looking for rosier outcomes, I would say. When numbers come out worse than expected, it's always unexpected, right? I'm not surprised, of course. The year-on-year number, as I said earlier, dropped 5.3%. Was expected to drop 3.9%. So let's just quickly go through here what the Financial Times says, and then we're going to look at the average nationwide house price to gold ratio, which I've covered several times on this channel, and I've been able to update it for the current ratio. UK house prices shrink at fastest pace since 2009. Well, this is deflation, or it's a drop in prices, right? So even when you have CPI going up, which they call inflation, you can have some prices dropping, and it's not surprising. Average property price fell 3%, 5.3% annually in August, as rising borrowing costs dent market. And just before we go through this quickly, not the whole thing, just wanted to show you there's another article yesterday from the FT. It looks like the Bank of England is getting cold feet already about raising rates even more. UK interest rates may not rise further, says Bank of England's top economist. Hugh Pill indicates he will vote to keep rates at 5.25% for longer, pushing back against market expectations. So how much do you want to bet he knew already what these numbers were going to be? Well, anyway, UK house prices contracted at the fastest annual pace since '09 in August as the impact of higher interest rates hit the property market, according to the mortgage provider Nationwide. So this is the interesting part here. House prices were down 0.8 between July and August, taking the average property cost to $259,153, down from a recent peak of $274,000 in August last year. And why are UK house prices so important to the UK economy? Well, because the UK economy over the last 100 years, especially after World War II, the industrial manufacturing base of this economy has been hollowed out. It's become an economy based on spending, credit, borrowing, and the value of people's homes, if it keeps going up, makes people feel more wealthy, and it makes people go and spend more, borrow more. So this has a really negative effect on how wealthy and how confident people feel. And I'm not surprised that the UK economy is in the doldrums. What's the solution to all this? Well, it's not clear cut at all. It's not like the strategy that politicians have been coming up with in the last few years. Infrastructure projects, leveling up strategies, trying to help the north of England catch up with the south. It's much more complicated than that. Well, it's not really complicated, but it's painful. I would say it's going to take a very long time to change everything, the mentality. And what do I mean by that? Well, we need to go back to a very tiny government. We need to go back to very tiny regulation. We need to go back to the rule of law. This is what made this country great many, many centuries ago, that the rule of law, property rights were all respected. And people were able to keep the fruits of their labor. And that's what we need to go back to, because right now the government is too big, taxation is too high, government is spending too much. And usually when government spends, it's not investment. They try to say that government spending is investment, but governments never really invest. They spend and waste. But that's a different story. Let's get back to UK housing. So I took those two numbers there, the peak in August last year at 274,000 and the August number from this year that dropped to 259,153. And I inserted, I had to change the number for 2022 on my ratio. I put the August number, even though I had the end of year number. And before we look at the ratio, just wanted to talk a little bit about Newton's third law, and that's the law that says every action has an opposite and equal reaction. So with that, just wanted to show you the chart here of how many. Well, this is a troy ounce. It's a Britannia. There you go. That's a troy ounce of gold. And some of you might be asking, why gold? Well, because up until 1914 and also 1933, or 31, sorry. Britain left the gold standard in 31. The pound was as good as gold. And even today, if you Google gold sovereign and pound, the gold sovereign, which is just under a quarter of an ounce of gold, is still legal tender. So what I'm trying to say here, gold is money. Gold came before currency, before the currency. It wasn't the other way around. It wasn't like someone thought of writing up a currency and then came up with something to back it. No, someone came up with the idea it would be easier to carry a piece of paper promising to pay this than carry this around, have to keep it safe. So even though we don't use it anymore because we've gone off the gold standard, and they've made even cash now, the paper currency is not accepted in many places. What we use as currency today is a gold substitute. So gold is the ultimate store of value, and it has been for thousands of years. And that's why it's important to look at the ratio between house prices and gold. And you can do that going back to 1953, which is the year that nationwide house price index started. And you can look at the price of gold all the way back to that period as well. LBMA keeps prices, I think, back to 1968. Prior to that, the price was fixed, of course, so it's easy to know what the price was. So here's the chart. And the higher this ratio is, it means the more gold you need to buy houses. And here's where Newton's third law comes in. And you can see here that prior to the '08 crisis, let me have a look here. We needed almost 700 ounces of gold. I'll give you the exact number that it was. I think it was about 672 ounces in 2004. So that was really probably the worst time to buy a house in relative terms to real money. And yes, it's come down a lot, but as you can see, it hasn't gone as far down as it went back in 1982, where we dropped to just above 90. And as I told you, I changed the ratio for the data for 2022. I put the August data at 279,000, and the price of gold at the end of August last year was $14.78 per ounce, the price of gold. So that ratio was at 188.7. And now with the latest data for August, I took the price of gold yesterday. It was around $15.34. And the average house price for August, $259,153. And it comes to 168.94. So almost 169. So it has come down quite a lot since 2004, but it's still quite far away from that 90 area from 1982. And I wouldn't be surprised if we blow right through that 90 area eventually. And how is that going to happen? It could happen with gold going up faster than house prices go down, or even faster than house prices go up. So you could see house prices go up in nominal terms, but if gold goes up much faster, you could see this ratio drop. That would probably happen in a hyperinflation. And where Newton's law comes in here is that this huge move we saw in the late 90s to middle 2000s in house prices has still to be corrected, in my opinion. Yeah, house prices are still very much unaffordable for young people or even people in their 40s, 30s, and 40s. Wages haven't kept up. So I still think we're a long way away from house prices being at a good level for investing or purchasing, be as it may. Am I saying you need to go out there, buy gold and wait for gold to go up and house prices to go down, or not go up as much as gold? No, I'm just giving you here an indicator that hopefully will help you decide when it's the right time. I mean, if by next year we're down at 60 in that ratio, then yes, I think it's a good time to look into buying a home or even investing. I'm not an investor. I only have one home. And yeah, that's what I wanted to talk about. So with that, let's quickly look at where the markets are this morning. It's 8:40 a.m. London time. So yes, we've got non-farm payroll today. That will be the key number later on at 1:30 London time, 8:30 a.m. Eastern time. It looks like it's expected to drop to 170,000 from 187,000. This will be interesting because it could move the market either way, depending. The market is very sensitive these days to economic data. So we got gold at 1943. It's up $3. High's been 44, low 38. Silver's up 13 cents at 24.55. High's been 59, low 39. The Dow futures up 94 points. The S&P, the NASDAQ is up 17. S&P futures up 10. Sterling is unchanged or slightly higher, 126.85. The euro as well is slightly higher, 108.57. Dollar's down slightly versus the yen, 145.40. Dollar's down 0.2 versus the yuan, 726.18. Check out the ruble, or the dollar versus the ruble, unchanged at 96 dollar ruble. The Aussie dollar is down an eighth, 64.75. Dollar's down slightly versus the Canadian dollar, just below 135. Kiwi dollar is unchanged, 59.67. Commodities, we've got Brent crude. Well, that's moving up quite a bit. That's not going to help anyone really, except OPEC. Brent crude is up 0.5% at almost at 84, 83.74. So Brent had actually that's not Brent crude, it's WTI crude is at 83.74. I think we were at 81 yesterday. So big day yesterday for crude oil. Brent is approaching $90. It's trading at 87, up 0.5% as well. Platinum, that's up almost $9, trading around 980. And high-grade copper also picking up nicely here, up 1.5%, trading at 387. Finish off with the bond markets. The 10-year yield, U.S. 10-year yield is up just over 1 basis point, trading just above 410. And the UK 2-year yield is at 522. The 10 years at 443 and the 10 years at 468. So pretty steady for now. The bond markets, I suspect we could see some big moves after the jobs data later on today. So with that, I wish you all a very good weekend. Take care. Bye.